All right, welcome back to Business Today, and we are doing Biz Chat. It means today we have Ken Gishinga from Inter Economics, and we're talking the biggest stories of the week. Of course, we've tackled the issue of the president's U.S. tour, and that has been completed. Now we want to touch on another big story that happened this week on its Matters Economic Survey report, where Kenya's economy grew, albeit marginally, from 4.9% in 2023 to 5.6% in 2024. And here is a report detailing some of the issues that were raised in the Economic Survey Report 2024. At a time, the global economy marked a slowed growth of 3.1% in 2023 compared to 3.4% the previous year. Kenya's economy reversed the curve, growing by 4.6%.
The GDP growth rate is 5.6% in 2023 from a revised figure of growth of 4.9 in 2022.
Agriculture, forestry, and fishing led the economic contribution at 19.8%, followed by financial and insurance services, real estate, and transport and storage.
The financial and insurance activities grew by 16.6%. Then we have the real estate, which grew by 13.3%, and we have transportation and storage that grew by 10.6%.
A severe drought in 2022, followed by El Nino, was attributed to the redirection of resources to save lives.
We started with a drought, a very severe drought in 2022. We haven't seen that for the last 40 years. And so fiscal resources, including support from development partners, were shifted to save lives.
Protecting the economic recovery remains important, with research pointing to strong growth, reducing poverty significantly, and enhancing sustainable growth.
We need strong growth. And that economic recovery, we have to protect it, because one of the major, perhaps, frontier ideas that we have developed in the last 5 years, especially in research, is to show that strong growth will actually reduce poverty significantly. Then it means that we have to look for ways and means of trying to ignite strong growth and to sustain that growth. And that is where economic recovery will become very, very strong, and it will be supporting us all through.
In spite of the growth in GDP, many Kenyans are decrying the high cost of living exacerbated by heavy taxation. All right, the Economic Survey Report. Ken, this is a big document, one of those dataful documents that can serve you for a better part of the year, just looking at the numbers. But maybe to start off, one of the areas that you're very passionate about is matters to do with wages and employment. Right. And from these numbers, I'm looking at the modern sector. First of all, total employment just went up 4.4%. Mm-hmm. Still, the informal sector dominate. Mm-hmm. Government, public sector jobs are not growing as much. Modern sector wages also of employment grew by 4.1%. Of course, juxtaposing that with inflation, you can see where we stand. But what did you make of this report on matters employment and wages?
Well, that's a very interesting question, Noah. And if you look at the two numbers, the GDP growth is at 5.6% and jobs growth is at 4.1%. So it tells you our GDP and our jobs numbers are not growing in tandem. But I think the big elephant in the room is that in a population of almost 50 million people, you only have about 3 million formal jobs. In a labor force of about 20 million people, you only have 3 million formal jobs. So 16 million jobs are in the informal space. So we are a very informal economy, despite being really the hub of the region. And these 3 million people, that's where we're expecting to draw all the taxes to provide services for the 50 million citizens who live. So I think from a fiscal perspective, it becomes a very unbalanced conversation. And I think moving forward, it has to be about how do we create an environment where businesses are thriving, jobs are being created. How do we move the 3 million jobs to 5, 6 million? Because depending on those 3 million jobs for taxes to support a 50 million person economy, it tells you that we're in a serious imbalance.
And looking at the finance bill, just to wrap it in, it's very revenue driven, which, I mean, each and every government is revenue driven. But do you think the government has been intentional in having this conversation of creating the right environment? That is one. And being intentional, job creation actively, before even we talk about heavy taxation now that we are able to produce. Now we can tax what we've produced from.
It doesn't sound like a very business-friendly finance bill. Just listening to the Association of Manufacturers and all the other many stakeholders who've lent their voice to this particular bill, it almost feels that it's adding a burden to businesses. It's making the cost of employees more expensive to the point where companies are thinking now, if I had 20 employees, I'll just downsize to 10. The moment you do that, it means the labor force that will be supporting the economy will be much smaller. So in a sense, it contradicts the bottom-up philosophy, because the bottom-up philosophy was really about job creation, creating more jobs, more opportunities, so that the burden of nation building is only felt at a very tiny level by everyone. What we have today really is, if you think about income tax, if you think about corporation tax, it's going to target very, very few people. And for the rest of the population, you'll just be looking at consumption taxes, which again make the cost of life that much higher for the ordinary citizen. So there is no that disconnect. We talk about expanding the wage base, the tax base, but you don't see initiatives to make businesses thrive so that they can hire more people, and we can move from 3 million people to 9 million people in the next 4 or 5 years. You don't find that type of trajectory. We don't even find targets on where we need to be at from a jobs perspective. And for me, that's a bit surprising. I would have expected to say, in the next 3-4 years, we need to move from 3 million formal jobs to about 12 million formal jobs. I've not even seen targets. And they keep saying you measure what you treasure. So if you don't measure where you are in terms of jobs and wages, then it tells you it's not even an objective in the first place. And it tells you and all the other proposals you'll come up with will really not protect jobs, protect businesses, and protect livelihoods.
Definitely. Agriculture is still king. We are heavily agriculture driven. Just to reference the numbers, major contributors to economic growth 2023, agriculture, forestry, and fishing 19.8%, followed by financial and insurance activities 16.6%, real estate 13.3%, and then we have transport and storage at 10.6%. And now we are introducing policies, potential policies that touch in these sectors respectively. Maybe just to start off, agriculture still being king, is it one of those areas that it's a little bit not stable? The weatherman has just predicted in the next few months or so we'll be having a drought. Right now we are having too much rain. Investment in agriculture, irrigation, still at a low, though we are seeing a lot of mechanization and whatnot. In an economy in 2024, how should we be doing this agriculture? Is this the way to go?
No, absolutely it's not. Agriculture contributes about 21.8% of the GDP creates a lot of jobs.
Yes.
But if you look at its budget allocation during budget, it's about less than 3%. If you look at percentage of bank loans that go to the sector, it's about less than 1%. If you look at levels of extension services, they're almost non-existent. If you look at things such as commodity trading, and these are the things I would have hoped in the US state visit, they would have been looked at, going to places like Chicago that have commodity exchange for about 150 years. I mean, these are places that have done commodity trading for almost well over a century. These are the things that I would have hoped we could have learned and utilized, even with our partners in the region, having commodity exchanges. So it tells you there's still a lot to be done in agriculture. But I liked how you talked about all the other sectors in terms of growth, because in almost every society, the trajectory you see of growth is you move from an agrarian economy, then you have an industrial revolution, then you move into the services. That's what you find in Europe, in the US. But in Kenya, we're almost going from an agriculture sector into financial services, storage. So there's that missing middle of manufacturing, of value addition, which can create immense amount of meaningful jobs. And I think the Association of Manufacturers has spent the last 2 weeks pointing out how this finance bill is making the cost of edible oils more expensive. So I think that part of manufacturing has to grow together with agriculture, because most of manufacturing is agro-processing, gets its inputs from that. So it tells you that there is no that strategy of moving Kenya nicely from an agrarian society into a high manufacturing society and eventually into services. We've almost skipped, we are now a service-based economy, but we ask where are the jobs? It means we left out a lot of the jobs in manufacturing. Manufacturing used to contribute about 15% of GDP, now it's about 7%. And I think that's where a lot of the conversations need to be, because that's where you can have very high quality, meaningful jobs.
Definitely. I mean, and this marries into, since we're in a global environment, balance of trade. And just going by the numbers from this economic survey, first of all, we are still net importers, okay? So there is a huge risk there. But looking at our top export commodities, and touching on agriculture, number one is tea. Number two is horticulture. Then we have apparel and clothing following there. Then coffee. Then iron and steel. So 3 out of 5 already is agriculture based. Now you balance this off with the imports. What we're importing. Top, of course, petroleum products. Then we have industrial machinery. So the idea will be, maybe we're importing heavy industrial machinery to create industries to sort of value add some of these products. And even just looking at that, maybe it might be my bad that I'm assuming we're importing raw products, that is tea and whatnot. But it's one of the challenges that we're facing, where we import a lot of raw other than value-added products. For us to change and skew this trade balance to our favor, what do we need to do?
When I talk to logistics companies, shipping and logistics, they say the biggest concern is the containers come filled with stuff, but when they leave empty. So it speaks to what you said, where we are so heavy on importation, but very light on exportation. I think on the exportation side, you've said it very well. Tea has been doing very well. Horticulture, in fact, one of the things that I saw from this economic survey is our horticulture contribution is almost at the same level as tea. In fact, I expect in the economic survey 2025 that horticulture will have even overtaken tea next year. If you look at the numbers, about 187 billion in that. Particularly if you look at things like avocados. That avocado space going into China, that's a huge opportunity. China is a huge market and with a big demand for avocado. And that's an area where Kenya can really make inroads. And I'd really hope, again in the US, we can be able to make those inroads. But in terms of import-export imbalance, I think we still have to bring in the philosophy of what, and it ties our education system, it ties our thinking on TVETs, it ties our thinking on our economic policy. Can we produce more locally? We have all the factors of production. Why are we importing onions from Tanzania when you have so much land in Namanga? Why are we importing furniture when you have our own forest system here? So I think it's a philosophical shift that has to take place within the entire administration, that we can do more, but we do need an enabling environment, whether it's cost of power, whether it's cost of raw material, whether it's the taxation policy. If you look at clinker, for example, the amount of clinker coming to the market has really reduced because of the import levies. But are we substituting it with our own capacity? And I feel like that's why we are not doing enough. So you can block your imports, but that doesn't mean naturally your local production will grow. You still have to put in effort. You still have to sustain. If we had, for example, our motor vehicle industry here, and this was an idea we had back in the 90s, had maybe that been incubated and fine-tuned, I think 30 years later, possibly we would not be importing as much vehicles from Japan as we could have been producing here. So I think it's a philosophy that has never been adopted by an administration in a serious way. And I think it's time that we actually consider it, particularly if you look at the unemployment numbers that we have. The unemployment numbers we have in Kenya really need to have a lot of activity going on here.
Definitely. And as we come to a close, there is the element of also the social aspects. I know in business today we touch on economics and whatnot, but at the bottom line is the lives and the people of Kenya. So investment in education and training, I know you've touched a little bit on that. The issue of health, seems to be sensitive. I mean, as a country, we are having issues with vaccines for our children. You can imagine the panic that it causes, especially for mothers. Yeah, if you've had a child, you're being told, hey, there's no vaccine. Shikilia kidogo. I mean, is it time that we make more noise in this regard? Because I feel those social elements of economics are not really discussed in economic forums.
I feel like policy always seems to be shifting. A few years ago, we were enticing one of the largest vaccine manufacturers to come to Kenya to set up. Only, I think, a month ago, they said they are not setting up in Kenya. So it tells you sometimes the desire is there, but the execution, because I think somebody would have gone and asked, why is that company that had already expressed its interest to setting up a vaccine, what has made it change its mind? Is it the taxation?
Yes.
Is it the policy? So I don't think sometimes we go deep enough. And I think that affects now our health. It affects how we think about our planning. Because the health ministry, we've just come from the health strikes, which I think lasted almost 40, 50 days. So there is a planning element to these things, Noah. There's a planning element, and sometimes one of the biggest debates we have as economists is, should the Treasury and the Ministry of Planning be together, or should they be separate? If you go back to the 80s, you find they used to be separate. Then in the 90s, they were brought together. Then in the 2000s, so they keep, one administration delinks them, another administration brings it together. But one gets a sense that the planning function is such a serious function that it almost needs its own seat at the cabinet table.
All right.
Because now that what answers the long-term strategy of the country in terms of health, education, vision 2030. I think all these things need to sit in a planning docket that's somewhat separate from the day-to-day function that Treasury has to do.
Definitely. Ken, our time is up. What have you been reading and what stood out briefly in less than 30 seconds?
That caught me by surprise now.
I know.
Well, I think my focus, I mean, I've been reading a lot of the economic survey.
Okay.
Obviously, that is, in economics, our Bible.
Uh-huh.
And there are some smaller areas that haven't gotten as much sort of attention
Okay.
from the public. But I think it's a document that probably was overshadowed with the US-Kenya state visit. But I think it's a document that every Kenyan, it's about 500 pages.
Okay.
But I think it's a document that anybody serious in doing some planning should actually have by at least on their phone.
Definitely.
If nothing else.
That's beautiful. I've been reading The Looting Machine by Tom Burgess. And hey, the more you know, the more you're traumatized. What is happening on this continent? And may the Lord help us. Anyway, thank you very much, Ken, for your input.
Thank you so much.
And thank you very much for joining with us over the past week on Business Today between 3 and 4. We appreciate you. And I hope that you have a beautiful weekend. And as Ken Kishinga would say, don't do anything that I wouldn't do. That's where we put a full stop. Up next, you have Mbuya KTN. Stay tuned and blessed weekend. I'm Noah Kipkimboy. We out. Asante sana.